Namaskar viewers, hello and welcome to another brand new edition of the Global Debate. I am Tina Jha. This week on the program, we discuss the state of the global economy. Optimism is seeping back into the US stock market as some investors grow more convinced that the economy may avoid a severe downturn. The benchmark S&P 500 has rebounded about 15% since mid-June, halving its year-to-date loss, and the tech-heavy Nasdaq Composite is up 20% over the same period. Inflation data released this week revealed that price increases slowed in the month of July, easing the strain on household budgets. By all means, a welcome reprieve for consumers and also a positive development for economic policymakers in Washington. So while there's some optimism in the US for now, in the UK, the outlook looks gloomy. Official data shows Britain's economy shrank in the second quarter as well. GDP dropped 0.1% in the April to June period after a rise of 0.8% in the first quarter. The Bank of England expects the economy to enter a year-long recession by the end of 2022 as Britons endure a cost of living crisis with inflation at its highest level in decades. In its World Economic Outlook, the IMF warned of the world teetering on the edge of a global recession. Nomura Holdings Inc. said in its report last month that many major economies will enter recessions over the next 12 months amid tightening government policies and rising living costs, pushing the global economy into a synchronized growth slowdown. The Global Economic Outlook, global inflation, and the fears of a looming recession. That's the global debate. To take the discussion forward, I'm pleased to welcome an illustrious panel on the program today. Pleased to welcome Professor Tim Harcourt, Chief Economist, Institute for Public Policy and Governance, University of Technology, Sydney. Professor, thank you for your time. Welcome to Sunset TV. Also, immense pleasure to welcome Ms. Alicia Garcia Herrero. She's Senior Fellow at the European think tank Bruegel. Ms. Herrero, welcome to Sunset TV. Glad to have you back on my show. And Mr. Ajit Ranade, he's an economist based in India. Mr. Ranade, thank you for your time. Welcome to this edition of the Global Debate. Professor Harcourt, allow me to begin the program today with you. And let's first take a look at the current state of the US economy, because any changes in the US economy have a global spillover. So let's try and look at how the state of economy has been panning out in America. New data shows inflation there has been easing. How do you assess the new data? Does it indicate that the American economy is rebounding?
Well, certainly the markets globally sighed a sigh of relief when they saw the latest data. I don't think we're out of the woods yet, but certainly some of the market commentators now think perhaps the worst of the inflation impact may be over and we may be going through a transitory phase, but it's hard to say with such limited data. Certainly some of the market economists I've spoken to have seen that perhaps central banks are going to factor in a slightly lower inflation rate, which means they won't be hiking rates quite as fast as they have in the United States and here in Australia. But cautious optimism, but perhaps the data's not enough to go on just yet.
Ms. Herrero, how do you look at it? Data over the last week has, of course, bolstered hopes that the Fed can now achieve a soft landing for the American economy?
Well, I actually think that this, and we talked about this already during the last show, that the idea of a global recession in 2022 is probably overdone. And it was overdone before this lower inflation data in the US because we were all coming from higher than potential growth in the US, in Europe. So it's very hard to suddenly, go into a recession out of that high level compared to potential growth. So that doesn't mean we are in a great situation. It just doesn't mean that there won't be a global recession. So in other words, the US economy is decelerating, no matter the labor data that was also very positive before the inflation data, which was also very positive, but it is decelerating. Europe is decelerating. China is decelerating very rapidly, probably the fastest of all. And that's bad for the global economy. But that doesn't mean we are in a recession. So we're avoiding that worst scenario. That's all we're doing. But that doesn't mean we are perfectly fine altogether, on the contrary.
Okay, what does Mr. Ranade think about it? Mr. Ranade, do you agree that the idea of recession is overdone? We're actually not in such a bad scenario as is being spoken about?
I think it's uncertain because the confusing signals came from the job market in the USA. The job numbers were much more positive, and in fact, the unemployment rate is at a low, pre-pandemic low. So that's what caused people to think. But I think there are three indicators which are indicating that we have to factor in a chance of a recession of about 40%. Remember, the stock markets can be very impulsive. They can go up and go down sharply. But the three indicators, one is from the interest rate markets, which is the spread of the two-year bond over the 10-year bond. It's negative. Then the second indicator is the growth rate of money supply, which is the lowest in decades in the US, the M2. Of course, there was an artificially high growth rate of 25% during the pandemic, just after the pandemic, but it's negative now. And the third indicator is the sharp fall in the oil prices and oil futures. So I would look at these three indicators along with the data that's coming out. And of course, remember that the IMF has sharply reduced various forecasts in its July report. So I don't think we should immediately jump to a conclusion that we are out of the recession fears in the US.
Okay, Professor Harcourt, let me also, talk about the UK, which is now, it seems analysts have warned it is nearing recession. The Bank of England warns that a year-long recession is something that Britain could see by the end of this year. What are your thoughts?
Well, it's interesting, isn't it? Because I guess we have to disentangle any cyclical impacts of Britain being locked into the global economy from some of the structural fallout from Brexit and some of the unravelling of its ties with Europe. That's such an important part of its trading partners. I mean, in some ways, I agree with Alicia that the deceleration in China is probably more important globally. China has still been going after this zero COVID target, still locking down cities. It's had terrible disruptions to its global supply chains, and now it's got quite difficult issues with housing. Building these enormous ghost cities and CBD tower blocks in Western China. A couple of places I've gone to, they not only had one CBD, they decided to build another one. So, in some ways, I think some of those domestic issues in China could have a disruptive effect too. But I think with the UK, there's the overall cyclical impacts of the downturn globally, but also to what extent are they from disengaging with Europe through Brexit? How much of an impact has that had on the UK? That's probably a factor to play out.
Ms. Herrero, what about the Eurozone economies? What is the situation there? Because the impact of the Russia-Ukraine war has been the maximum in that very region. How is that region coping with the twin challenges, first of the pandemic and then the aftermath of the Russia-Ukraine war?
Well, the pandemic, in a way, if you look at mobility in Europe, is basically over. I mean, we don't have any restriction of mobility, thus the impact on growth, if anything, positive, because we finally have tourism, booming in Europe. So, so I would argue that COVID in Europe, for the time being, is just a story of the past. If it's only bringing actual growth because of the pent-up demand. Of course, Ukraine is a totally different issue, but it affects Europe very differently depending on where you are. This is why by now, basically Southern European countries are growing faster than expected, and Germany, which is severely affected by its energy dependence from Russia, but also massively affected by the economic situation in China, because that's Germany's largest export market when you exclude the EU. So two shocks on the German economy, which is the heart of the European economy. And that's where the problem lies. But it's not a generalized problem. And I want to highlight that is very uneven across European countries. The worst by now is indeed the German economy.
Also, Ms. Herrero, inflation has been a big worry for all of these major economies. we have seen latest data suggests the US has managed to contain inflation. It's easing, not to the extent that Fed would have expected, but somehow it's a positive signal. What about Eurozone? What is the state of inflation?
Inflation in Europe is different than the US. So you may say that the slowdown is not happening as fast, but there's only one reason for that. That's energy prices in Europe. Excluding Southern Europe, we call it energy island because it doesn't depend on Russia and basically is isolated from those high energy prices. But the bulk of the inflation comes from food and energy. Core inflation is quite low in Europe, and there are hardly any secondary effect into wages, which means that inflation could be under control faster, believe it or not, than the US the minute energy and food prices are under control, because there's not yet that pass-through. That's different in the US. Wages have been increasing quite rapidly. So we're not yet there, but the slowdown in inflation could be faster in Europe if we control these energy prices.
Okay, before I go across to Mr. Ranade to understand the situation and the stability factor that has helped India through this crisis, very quickly, Professor Harcourt, let me get a sense from you about the state of the Australian economy, the state of inflation there, and how tighter monetary policy, is it also weighing in on the Australian economy?
Well, it's interesting because the RBA had not done anything with rates for a long time, and then sort of inflation caught up on them and they hiked pretty quickly. And Australia's had an issue where they've had inflation and cost of living rises, but wages have been quite sluggish. So the Fair Work Commission actually gave minimum wage workers a pretty good boost of 5%. It's interesting with Alicia's point about Europe and Germany. Australia's pretty much tied to China and India and ASEAN. They've complained that we've had too much Europhobia and not enough Eurovision. And ironically, the Russia-Ukraine crisis has meant that I've had delegations from Germany looking to Australia for green hydrogen. So in some ways, ironically, the Russia-Ukraine crisis has actually brought Europe and Australia, particularly Germany, closer together. And in some ways, Australia is really thinking about the future in terms of rocks and crops, in terms of agriculture, because with Ukrainian farmers getting off their tractors and picking up weapons, that means that Australia's filling a lot of that void in wheat. And also now with energy, with Germany, Europe not wanting to rely on Russia for gas, they're looking towards Australia. So that's been the main consequence of the Russia-Ukraine fallout.
Okay, Mr. Ranade, let me get in your perspective. We understand economically, of course, it's been a tough time globally for every country. First impacted by 2 years of the pandemic, severe lockdowns, which, majorly impacted the leading economies as well. And then the fallout of the Russia-Ukraine war we've seen. But of course, some countries, even in this situation of economic volatility, are faring better than others. So, for example, India has been able to insulate itself in this time of uncertainty. What is it that we've done, for ourselves that has sailed us through so well, despite the pandemic, despite the fallout, and despite the impact on the global supply chain?
Well, first of all, as the IMF revised outlook says, despite the downward revisions, India will probably be the fastest growing economy in the world in 2022. I think there are several factors here. We are riding on domestic momentum. As you know, in the last few months, the Index of Industrial Production, IIP, numbers have been quite robust, almost double-digit, 12 to 15% growth, which shows some industrial activity. Secondly, as you know, the GST collection, this is a high-frequency data because it actually captures economic activity. They are clocking new records of 1.5 trillion rupees collections every month, and remaining that high for several months now. Thirdly, a very important part of India's economy is agriculture. And the outlook for agriculture growth this year is also about 3 to 3.5%, which for that sector is good growth. And the services sector, as Ms. Alicia said, that because all mobility restrictions in India have actually been, are over for quite some time now, we are seeing that manifested in services sector, in domestic travel, in fact, even tourism, in domestic tourism. So all those factors, I think, are contributing to the domestic momentum. Remember, just like the US, India's dependence on trade and therefore global situation is somewhat less. I'm not saying it's not going to be affected, but it's somewhat less because the domestic momentum. And of course, all the fiscal measures. During the pandemic, India was the country which used less of its fiscal ammunition. And I think we are seeing now that become an advantage. So the fiscal push also is being used more judiciously. So I think all those factors are contributing to an estimate of about 7% growth, a little more, 7.5% growth this year, which means that at the end of this fiscal year, will be about 2 percentage points higher than before the pandemic. So, and of course, the export performance. So I think all these factors are contributing. Okay. It seems to be a wide, pretty, across the board recovery.
Absolutely. So certain factors which have helped us recover, after the kind of impact and the setback that we faced during the pandemic. But, if the global economic situation continues to prevail, Mr. Ranade, it is going to have implications on the Indian economy. So amid the global headwinds and the kind of new uncertainties that keep arising, what kind of implications that you see, particularly if this recession-like situation continues?
Well, India has, first of all, a huge energy dependency on the world. 80% of oil is imported. But here too, by a strange, sort of quirk in geopolitics, India has now ramped up its import of oil very substantially from Russia, from whom it's getting a big discount. So, and again, a savings of something like $30 to $40 billion because of the discount, which actually is a positive impetus for the domestic economy. Now, of course, we don't have time, or this is not the place to debate about this geopolitical angle, but that's definitely a plus factor. India's exports did very well last year, the fiscal year which ended in March, and the run seems to be continuing. India's export of software services is clocking at $180 billion annually. And I don't think software has been affected that much by the recession, although we'll have to see. See, India's dependence is much more on the US than Europe. So I think on that front also we should be doing okay. Inward remittances from overseas workers is clocking close to $80-90 billion. So there are these aspects, but you're right that we cannot, of course, if Europe goes into a recession, that cannot completely not affect India. And remember that actually the bigger factor, I think, on the global economy is what's happening in China. The Chinese slowdown, the Chinese zero COVID policy, the disruptions, all that will actually matter as well. But on balance, I feel that India is, because of its domestic momentum and some judicious policies domestically, is probably going to be able to weather this recessionary winds in the world better.
Okay. Professor Harcourt, let me now, because Mr. Ranade spoke about the geopolitical changes, first the pandemic and then another crisis, which of course exacerbated the existing crisis of the pandemic, the Russia-Ukraine war. Geopolitical fragmentation, of course, has become the new normal. It has impacted global trade. What are the kind of consequences in the longer run that you see on of course, the leading economies and also the developing economies, which are dependent on the leading world?
Yeah, no, well, that's, I think more than interest rates and short-term economic impacts and probabilities of recessions, the big things are, I think, the geopolitics, particularly in light of, climate change policies. For Australia, obviously, we're very close to China and India and ASEAN trade-wise, though geopolitically, we're very close to Europe, UK and the United States. So we have a bit of a very careful balancing act. With respect to Russia and Ukraine, unfortunately, Australia's actually benefited economically because you took 35% of wheat exports out of Ukraine. Australia filled that void, and of course, now Germany looking to Australia in terms of hydrogen and gas to get off the dependence on Russia. So in the short term, the Russia-Ukraine situation has been economically benign for Australia, although a worry, obviously, for the international economy. With us, we're watching China and Taiwan very closely, and I think that's why the Quad, India, Japan, Australia, the United States, those sorts of alliances now matter a great deal. And the reason we, of course, signed a free trade agreement between India and Australia is because we're really looking to India as a very key engine for future trade, and even with things like student visas, we see India is a very important nation for us in terms of human capital and collaboration between our universities and the great research institutes of India. So that's going to be very important to Australia, I think, in the medium term.
Okay. Mr. Ranade, since you spoke about China earlier on in your answer, let me ask you, we've been able to, sail through and stand out even in this time of uncertainty. But as China dials down, has it been an advantage for India? Have we been able to emerge as the global manufacturing base?
Well, this is a longer-term phenomenon, that there is ever since, in fact, it began during the presidency of Trump. President Trump, the sort of, I would say, the saber rattling had begun, the tariff wars and tit-for-tat policies. So there was a concern about de-risking. So if it was not going away from China, at least China plus one, locating or relocating some of the manufacturing bases outside China, and therefore markets like Vietnam and India were attractive. And we've seen that. We've seen relocations in automotive, in electronics, especially, telecom, iPhones, for example. So India will be a beneficiary of this geopolitical realignments, and it's becoming, the camps are getting somewhat entrenched in their positions. So India will definitely will benefit, as Professor Tim also said, that India is a very significant and growing growth driver in the world. Its demography is a big factor in its growth outlook. And global investors, I'm talking about investors who invest in new businesses, not just the stock market, cannot afford to ignore locating in India, both for its consumer and as well as production advantages. So I think that's a medium-term phenomenon. I feel this is, and of course, India's geopolitical positioning also, just like Australia, is to be balanced, because, there's an emerging Russia-China alignment. So India, Russia has been India's traditional geopolitical ally. So there is going to be some delicate balance there. But all said and done, the economic outlook for India, even in the context of emerging geopolitics or geoeconomics, is advantageous to India.
Absolutely. So as you rightly said, we are set to emerge as the fastest growing economy in the year 2022. We've proved to be stable, and let's see how the situation pans out globally also, and the kind of implications it's going to have. Ms. Herrero, coming to you for the last remark. The issue is that inflation at current levels clearly represent a clear risk for current and future macroeconomic stability for the leading economies, which are going to have repercussions worldwide. So what in that scenario is going to be the policy priority for the policymakers?
In the developed world, inflation by now is clearly the policy priority. In fact, it's unheard of that the Fed hikes twice 75 basis points. So I think that the developed world has already demonstrated that inflation is really the most important objective. By the way, the European Central Bank also did raise 50 basis points. That was well beyond what was expected, and much earlier than originally expected, which was the end of the year. So I think by now it's very clear. Of course, Australia, the exception is Japan, but Japan has an issue with very low core inflation, not so much headline inflation, which is already above the 2%, which is the BOJ target. But other than Japan, I think the developed world has already shown its teeth against inflation. Now, the question I have is, has the emerging world done the same? And to me, Latin America has, by all means and purposes, just that it isn't enough. Inflation is still not under control. Also because history matters. In Latin America, people actually adjust their expectations to high inflation very quickly. In Asia, we're not yet there. Central banks, in my humble opinion, have been slow. RBI much less than others, by all means. But look at, for example, Bank Indonesia. You have central banks that have hardly taken any action. The Philippines, very little. Thailand, very little. So I feel that in Asia, we could have an inflation surprise. We already have it, but I mean to say, because the central banks are falling behind the curve, more perhaps sustained than in the developed world at this point in time.
Okay, so whether there's going to be an inflation surprise in Asia is something that we'll have to watch out for. But that having been said, I'll have to wind up the program. Thank you to all my guests for joining me on this edition of the Global Debate and sharing your thoughts, your views on the current state of the global economy. Absolute pleasure to have you all three on the program with us on Sunset TV. Thank you once again for your time. So that's it from us on this edition of the Global Debate. Thank you, viewers, for your time as well. I'll see you same time next week with a different topic and a different set of panelists as well. Until then, take care of yourselves and keep watching Sunset TV.